US stocks have sharply whipsawed higher after the DeepSeek deep sell-off. Here are the stocks and ETFs that you need to watch and maybe consider. My name is Jessica Amir, a market strategist here with Mumu. It's great to have your company and happy Chinese New Year. Well, Nvidia shares have led the rebound. They rose 9% to $128.86. That's pretty encouraging considering Nvidia fell 17% in the day prior, down to $118.42. And it shed $600 billion in market value, marking the biggest ever one-day drop for a US company in history. So pretty life-changing stuff. So not only are investors and traders using that pullback as opportunity to buy the dip, so we saw that in Nvidia close up its or towards its high of the day after it opened at $121.81. Why am I saying this? Well, this basically suggests that more buyers will probably be pouncing on Nvidia because we've seen the rush up in its stock. So we could potentially be seeing Nvidia's price push back up. Now, what is also supporting this thinking and notion is that seasoned investors and traders remember that Nvidia's share price is volatile throughout history. Its shares have fallen 20 to 30% over the past year, and then it's rebounded to a brand new record all-time high. So savvy traders know that. They're keeping that in mind. Now, what is key here is that this week investors are gearing up for the release, of course, of big tech earnings. This week's data will probably validate a further rebound in Nvidia simply because the incoming Chinese competitor DeepSeek can't likely cause Nvidia's dominance and the Mag 7 clients to shake off. So this week you'll probably in fact see the opposite. You'll see Microsoft, Meta, Amazon, Tesla and Alphabet all announce this week they're spending even more on AI and digital revolution spending, and perhaps that means buying more of Nvidia's chips simply because these US hyperscale companies need to stay competitive and grow, so they basically need more Nvidia chips. But as always, we need to see this data manifest to validate another move higher in Nvidia. Moving to other moves to consider, we are seeing investors heavily buy into downbeat tech and AI affiliated stocks that were indiscriminately sold off. So we saw cybersecurity giant CrowdStrike shares rise 9.4%, software giant Palantir up 6.3%, while investors are broadly buying into power grid and uranium companies. That includes Vistra. Now, why is this taking place? Well, Vistra just focusing on this, here's a chart of Vistra shares. They rebounded 8% in normal trading. In fact, they're now up 9.2% as at the close of trade. We can see that towards the top left of the screen. So what is going on? Well, I guess investors are considering the US is expected to spend $4 trillion from now right through to 2050 to transform the energy grid. And Vistra is touted to be a key stock that benefits from this mass scale spending. All in all, the broad mood is a stark contrast to yesterday, and we've seen heavy buying into tech and selling into defensive sectors such as selling in staples and utilities. But for perspective, it's really important to note that this week's wild, fast and furious shake-up was exactly that. It was a wake-up call. Perhaps what to expect this year. Perhaps this year could be very volatile, but of course volatility brings opportunity. And that brings me to the VIX. Here's a look at the VIX index, which you can track on Mumu. That basically suggests that fortune favors the brave. This is something to keep on your radar. Keep in mind, yesterday we saw the market's fear gauge spike to its highest level of the year yesterday. It rose to a reading of 22.5, but now the volatility index, as we can see, has calmed back down. It's fallen to its average range of about 16.41. So for now, this basically means that the market mood can get a boost, and that supports buying perhaps in tech and AI and uranium companies that were downbeaten by that sell-off that we saw. So keep an eye on the ETF NDQ. Here's an example. Today's Australian inflation data and tonight's commentary from the Fed, if that suggests that inflation is coming down, you might be expecting more highs ahead for the NASDAQ 100 ETF and ETFs like this. So perhaps they could be climbing more ladders up for Chinese New Year. And of course, it's the year of the snake. There's plenty to consider. For information on stocks and ETFs that we've covered today, head to Moomoo. Thanks for your company. Happy Chinese New Year.